there's absolutely nothing stunning on that. You have to take this BOJ measure in the context of a positioning in dollar yen that was obviously probably not expecting this tweak. It's a tweak. Obviously, it opens the window for some creativity here from portfolio managers, especially hedge funds who are heavily positioned in dollar yen in the transition of the BOJ leadership, Kuroda leaving, right? So that can open the way. But it's also very important, if you look at this statement, there's a lot of concern in the trading dynamics of JGBs in the market, given that, yes, the BOJ owns so much, right? So giving a little bit more leeway of, in the band of JGB trading makes a lot of sense, right? In an environment where obviously volatility in the core or rates volatility in the core, it's coming down now, but we are elevated levels. So in a way, the BOJ is saying, you know what, let's allow JGB to, trades. I mean, this disparity of volatility is so huge compared to everywhere else in the core. Can be Euro govies or can be US Treasuries. So let's allow this gap to close down a little bit. But and as you said, Steve, they are saying, pretty much saying, if necessary, we buy more JGBs.
Wow. Yeah.
Right. So I definitely call this a tweak.
Well, let's shoot this fox for certain this time. So Steve talked about the inflation rate, 3.7%, which by our standards in the West looks very modest. But it is an 8-year high for the Japanese, and it's something that they haven't seen in their economy for 3 decades. So is there any way that we could, because that's ultimately what the market is saying, this is a hawkish move and that's why the yen is higher here. Is there any way that you see this as about fighting inflation in Japan?
No. I think it's a lot more the infrastructure and the dynamics of JGB trading and the gap between volatility rather than anything else. And let's be honest here, as I said, we expect inflation in the core to alleviate the pressure a little bit over the next 3 to 5 months, right? We are not expecting, new peaks, right? The story in the long term can be, it's another story. This is, that we can discuss, over the next 3 years.
Yeah.
But for now, it's a lot more JGB trading.
Yeah. There was some talk that maybe Prime Minister Kishida might look at shifting the mandate of the Bank of Japan. I think there were denials all round. But again, you wouldn't see this as an attempt by the governor who's just about to depart to get ahead. Historically in Japan, as you know, there's been an ongoing spat between the BOJ and the Ministry of Finance, and at different times that relationship has worsened and it's had consequences for policy, and sometimes it's improved. I wouldn't be surprised if some in the LDP are getting frustrated with the BOJ at this point and feel it's necessary to tweak the mandate.
Look, criticism towards the BOJ will always exist, and especially now, and between now and April when Kuroda leaves, we are going to be bombarded with that, right? The BOJ is the pioneer of interventionism, and it actually gave the headlights, to other central banks of the core, like ECB and Fed. But, the fact of the matter here, over the next 2 years, we are going to debate a lot about inflation targets and the current stance of inflation and inflation expectations. Everywhere else, we are far, far away, miles away from any target you can think of. Yeah. Anything that was advertised to us up until 2019, we are miles away. So this is going to be a very important debate.